Welcome to M&A Access, the official podcast of the Alliance of Merger and Acquisition Advisors. My name is Gina Galusha. I'm the Executive Director of Memberships for AMAA, and I've got Jennifer Marrinucci with me today from Alliant. Jennifer, welcome.
Thank you so much for having me.
So glad you're here. Tell us a little bit about yourself, what you do, and your time in the industry.
Yes. I've been in the industry for 18 and a half years. Over the course of that time, being with an insurance broker, accounting firm, a law firm, and an investment bank. Over 18 years, a lot of experience that way. Spend most of my time now placing property, casualty, cyber management liability, but also employee benefits and cybersecurity.
Awesome. That's a lot.
It is.
You've been in almost every corner of the M&A industry, haven't you?
Yes. It gives me a different perspective than others, understanding all those sides, for sure.
I would think that was a strong strength. So
yes.
You've worked in private equity for over 18 years. Mm-hmm. What would you say is your key to success?
I would say building relationships and building mutual respect and trust. That, many times we see our jobs as being very transactional. That's what we do, transactions. But over the course of the time, building relationships and people understanding who you are, that you're going to show up every time in a disciplined way and do a great job for them, and giving them many times even deal opportunities. And I think just following up and answering their emails. They've told me many times, y'all are very responsive. So I think just consistency, discipline, relationships, and mutual respect and trust.
That's great.
Yes.
That's a good answer. Okay. So a lot of people view networking as transactional, right? Hello, my name is, here's what I need from you. Tell me how you see that differently.
Well, it is, transactional in that you need to know who your targets are, but I think along with that, people want to do business with people that they like and trust. So maybe you're on the other side and they want to see your deal, but they're like, I don't want to work with this guy. And many times we do have a choice, and or sometimes they love that deal no matter, they'll suffer through it. But I think just reminding yourself that building relationships, taking time to get to know people, definitely in a more personal way. I do a lot of events I put on that help people interact in a different way, not just meeting, but going on hikes or doing a workout together. Something like that bonds you. So I think after the event is over, even going to the bar and talking to people about their family, and remembering that. I've heard so many times, this guy's asked me my name 10 times and he still doesn't know who I am. So that is not impressive. So yeah, just getting to know people, and as you talk to them and understand their family or where they went to school or where they like to vacation, it helps you to remember who they are. And of course that doesn't mean anything in a deal, but just having genuine interest in people, and people want to work with people that are fun and cool. So
that's true. That's true. And how would you recommend, you meet so many people at a conference. How do you recommend that you remember all those things?
Well, taking notes and putting it in their contact information is helpful. Sometimes I'm better at that than other times. But one thing Jay Jester from Audax, said that I thought was so impactful is at the beginning, you want to meet everybody in business development. When you're young, you want to meet everybody in the room, all the private equity firms if you're an investment bank, and vice versa. But Jay said his goal is to have 3 great conversations, not to have 50 or 100, and to go around and meet people and just exchange contact information, but to have 3 really good, relevant conversations. And I've taken that to heart.
That's really interesting. I used to be in education, and we'd say the same thing about a lesson. What are the 3 things that you want them to come away with, right? And make sure you're focused on those 3 goals.
Right.
Because that's manageable. It's manageable and it's impactful.
Right.
For sure. What do you think most people get wrong about networking?
So I wrote a few things down. I wanted to make sure I remembered, but networking knows is what I call it. You don't follow up. You're self-serving and transactional. You don't understand the broader spectrum ecosystem of your industry. You disappear, or you don't communicate, or you expect people to come to you. So, yeah, you have to be out there and hustle and go and meet with people. You can't just go sit at your table and expect people to come to you and a deal to come to you. So
you can't be shy.
You can't be shy.
It's
the wrong industry.
You can't be coy.
Right.
That's great advice. I think that one stood out to me the most. So, in your business, you create value in terms of insurance in the M&A process. Tell me where you recommend folks really start to have a conversation with you.
Well, in the past, many people bring us in as a late-stage checklist, but I do believe most investment banks are encouraging their clients to do a lot of diligence up front. So, diligence on the accounting side, getting a Q of E. For us, we're doing diligence on property casualty, cyber, and management liability. So especially on the cybersecurity side, we do cyber diligence as well. You want to see how strong their controls are. You want to see if there's any red flags. Do they have a lot of claims that they need to take care of? Any litigation that's pending. On the employee benefits side, what is their structure? And how can that, if it's an add-on, how does that go? How would that merge with their platform? So yeah, there's so many things that we can do, and that I do think coming in early and doing it helps us and helps our clients. And also looking at reps and warranty insurance early on. So people understand the cost. It really affects the structure and how a deal is done. And if you see all these things beforehand, it can really help you close that deal, because there's a lot of points that come out of what we do that will stop a deal. Or right. Make it more costly, or you'll have to renegotiate. So all the information that you can find at the beginning, helping that client be prepared for market, is super important.
I'm really curious about what you said in terms of employee benefits. What do you look at when you see it, it's an add-on, it's, for a platform, that kind of thing, and how do you analyze if that's going to be a good fit, and what do you need to do for it?
Well, we kind of have a multi-year process. So recently we had a platform and 2 add-ons within 7 months. One of the add-ons had a PO, so it's hard to get out of a PO, and it takes time. Some maybe fully insured, self-insured, and also you don't want to just change your insurance, maybe you just renewed. So coming up with a multi-year process and aligning those employee benefits or even insurances, that's kind of what we do. That's how we come in with that strategy. We don't want to change everything day one. So how do we be a part of that 100-day transition? And many times we've really added value. One time recently we saved a company $1 million in their spend with their auto. And that was partially because we found a new carrier in the space. But before the deal was closed, they had individual policies for each driver, each auto, and then we brought them all together, and so we can find cost savings many times, which is great.
That's significant.
Yes,
it is.
And in their spend too.
Right.
I mean, we can. Sometimes they're like, "Wait, I didn't know that it was this costly." Maybe it's a manufacturing industry, and the cost of maintaining equipment, or maybe it's aged equipment. So there's just so much information you need to evaluate before buying a company.
Think through. From your experience, what risks do buyers or sellers underestimate?
Not evaluating or identifying the red flags early on, which we kind of talked about how we can help do that. Anticipating potential deal friction. Again, when we do our job, that helps identify those things. Aligning a risk strategy and valuation. And then I would say avoiding surprises that can delay or derail a transaction. That could be a people problem. It could be a management executive problem. It could be litigation or potential regulations that are coming, up in the space. It could be many times you'll do a background check on one of your executives and find out that he's been involved in something, or she, I guess, has been involved in something that is a deal breaker. So, yeah, you just have to, there's so many risks out there, and evaluating it early on and seeing how you can navigate it and is it worth your time is important.
When you say people or manager problems, is that what you mean? Running those background checks, seeing what's out there, or are there other things?
Oh, there's other things. So if you're paying your employees right, it's a way to retain and attract good talent. And finding out how many of your employees are contract versus an employee. Many times they can evaluate that and say, hey, we would rather our employees be contract because we don't have to pay for all their insurances. So, yeah, there's just so many things to think about, and we can really help add value and help them make those decisions.
So when you do that kind of search into what you need to think about, what they need to think about, and make that list, do you have a checklist that you work through based on the company, that you just kind of work through that, I'm going to call it diligence, to make sure that you remove that friction early on? How do you go about it?
Well, we have diligence checklists, but a lot of these things are just experiences. After you've done so many transactions, you just have this kind of information that maybe not on a checklist, and it's very dependent on the industry and sub-industry because they're all different. I work with a lot of manufacturing and distribution companies or consumer food and beverage, and the red flags are very different, or things to look at. Do you have a lot of autos? Do you have a lot of machinery? And the food side, there's a lot of risk too. So, and a lot of times we help clients with business continuity plans. Like, you think you have a plan if something happens, I would say on the cyber side, or manufacturing side. If you lose electricity, if you lose water, what are you going to do? You really need to think about how you react to problems and how you can get back up and running. Of course, you have business interruption insurance, but it can really cause issues with your clients, and they don't trust you that you're going to be able to give them, maybe a product or follow through. So coming up with a good business continuity plan is very important, and that's one thing I'm always preaching about to my clients.
Well, no, that makes sense, because once trust is lost, it's so much harder to regain the second time.
Right.
So making sure that you have that plan in place is essential, for sure.
And some things are hard to plan for. But once we've seen it a few times, again, kind of experience and history, then like, hey, have you thought about this? And there's a cost to putting certain things in place, like getting a generator. If your electricity's gone out on a regular basis over time and you keep on having claims, then maybe think about investing in a generator.
Right. So tell me,
Yes.
I'm curious now, what's the least complicated industry when it comes to this kind of thing?
Oh, well, I would almost want to say business services, because you don't have all the equipment and things like that. But people are probably the most difficult to manage. So, and we're flawed, as much as we don't want to make mistakes, people do. So, like E&O insurance or whatever. So, I think every single industry has its challenges. So, yeah. Okay. I don't have a clear...
What about the most complicated?
The most complicated. Anything that has to do with having people's personal information would be the most complicated. On the cyber side, health side. So those are the two I would say are most sense. Complicated.
Finance, that kind of thing, yeah.
Like healthcare, having people's information on the healthcare side, or then credit card information. because people can come in and just steal that information. And I would say on the cybersecurity side, social engineering is the biggest problem right now that we're having. So we encourage our clients to wait to announce an acquisition, because however the bad actors find out about it, they come in and they can, get access to your email and change the wiring instructions. We've seen this over and over again. So, making sure people are reminded, calling the other side, confirming the wire instructions. I always say give the wiring instructions way earlier. I mean, if somebody sends you money on accident, that's not the worst thing that can happen. But, just really being an advocate. I don't have to remind people of that. And, you would assume that people do know that by now. But I do, whenever you're so busy with all these checklists, people forget. So I look at myself, see myself as a strategic partner with them, and how would I want them to treat me? I would like a little reminder. So.
Absolutely. When you have that much going on, it's such a high stress situation and there's a lot to do.
Yes.
Yeah. No, it makes sense.
Yes, and it can save a lot of time. And, you're so excited about this acquisition, and then you just lost hundreds of thousands of dollars, which, we want to make money, not lose it.
Absolutely.
Yes.
Do you ever do like a little practice one at the beginning?
So we not only do we assess whenever we do cybersecurity diligence, we'll assess the controls they have in place and how healthy they are, but we also help them monitor and get to where they need to go. So thank you for asking. But how we partner with our private equity clients and their portfolio companies is we will evaluate each portfolio and say, this company, dependent on their industry and size, etc., you're at a 2 and you need to be at a 5, and we help them get to that 5. So we're kind of that in-between person that we call their portfolio company every month or two, depending on where they are in the process. And we also help the private equity firm understand the cost that's involved and the time that it takes to get there. But we, instead of having somebody on their team that's reminding them and doesn't really understand cybersecurity, we help them get to where they're going. We advise them on vendors, and we really are their strategic partner, and can be. We're not always that. We don't always do that for every portfolio company. But if they bring us in, then we have an amazing story to tell as we go to market with their cyber insurance.
Sorry. So. Throughout your career, you've worked with a lot of different deal makers. What would you say separates those who are successful from those who struggle?
Yes, I would say, and we're doing a panel to kind of touch on this while we're here too, but being consistent and focused and how you're investing. Don't get off track. Stay in your lane. I say that, but I also think about at some point things change in the environment, and you have to be opportunistic and creative and flexible as well. So I would say mostly stay in your lane and be consistent with how you invest. If you need to, change a little bit about how you do that or how you look at the environment, maybe like during COVID, you needed to change. If a restaurant did not have order out, they needed to change that, right? Or even a retailer, they needed to have online ordering, but mostly stay in your lane. Or I even think about BlackBerry or Blockbuster. They were staying too much in their lane, and they needed to change with the times. So evolve with the times, but follow your North Star. Yes, and we have to change with the times. But overall, LPs, investors, want you to invest in what you've said you were going to invest in.
Right.
So you can always go to them and say, hey, we've seen this change in the marketplace and the industry. What do you think? But make sure your LPs and investors are behind you.
Good. Since you've been in the industry, what have you noticed has changed for women in both private equity, investment banking, and the industry as a whole?
Well, I I think when I started 18 and a half years ago, there would be 5 women to 500 men at an event like this. So I do see there's a bigger presence of women in the space. I think more women are going to college, and I'm hearing that they're surpassing graduating the men. More women are graduating college than men. So it'll be interesting to see, over time how that affects private equity. But I also think there's a few factors of why women aren't, moving up in ranks. There's so many different factors. Maybe a woman wants to stay home and be with her family, or other things. But I would say it's kind of sad to me looking at some private equity firms' roster, and it's all men. And so I do think that's changing. A lot of websites I look at, there's a lot of women or a lot of diversity. And not that, they're privately held. They can have whoever they want, working with them. But I do think they're missing out. I think diversity, having a different sight of what's going on, people's experiences, they can bring that to work. And I think it's an advantage, a competitive advantage that you should see it in a different light. But you know what? I have had an amazing run and working in private equity. I have nothing negative to say about that. But I just think people need to be open-minded and see that differences bring a different thought process. Or if you're going to meet with a female founder or, someone with a different nationality, you should be able to represent that on the other side. So
on the other side of the table, yeah.
Yes.
I'm happy to report that over a sixth of the attendees here are women, so that's really exciting.
That is? Yeah.
So, and then I would, to echo what you said, I work on the finance council at my church, and when I first interviewed the fellow who interviewed me, I said, well, if you're interested, he said, oh no, I have daughters. And I was like, where are we going with this?
Yeah.
And he said, I need a woman on this council. I need someone who thinks differently,
Yes.
who's going to ask different questions, right?
Right.
Because there is a different pattern to our brain, and there's a value to be had.
It is obvious that men and women are different. We know that. And you brought up a good point. I do feel like a lot of men in the industry, their daughters are graduating with finance accounting degrees, and they want to promote them. And so whenever they do see resumes that come across their table that are females, then they're more open. They see it in a different way now. So,
yeah. Thinking back to when you first started out, is there any advice that you wish you had that you learned along the way?
I feel like I had amazing advice and very blessed with my career. I had an amazing mentor that I worked with for 7 years at the beginning. I had people that promoted me and opened doors for me. I had to step through. I had to do the interviews. I had to show them the value that I brought to the table. But I do feel like I had a lot of amazing opportunity, mentorship, sponsorship. Sometimes I'm bewildered how well I've made it in this industry, and maybe, just being a good person, being consistent, having that. I'm good at relationships. I care about people. I like to promote people. I like to connect people for whatever reason. I think I can maybe give advice, but I don't know if I could have had a better advice or career.
That's awesome. Not a lot of people can say that. So in turn, I know that you're really active in, networking groups and that kind of thing. So what's the advice you pass on to ladies and to up-and-comers?
I think it is a marathon, not a sprint. So, every day you just I think having goals, and I'm very goal-oriented. I'm all about vision boards these days, and not like vision boards that you cut out of a magazine, but just being very intentional about how you're spending your time and effort. So, making sure you're calling people, following up every day, staying in contact, being out there on a regular basis, thinking about other people, not just being, thinking about me and I want your business, but how can I help you? and thinking about others, because if you put good out there, it always comes back in one way. So, I think just one day at a time, making good relationships, earning that trust and respect, which takes time. All of it just takes time.
It's a long game.
But showing up and,
So we've got to finish a couple quick fire from your gut, first answer, go kind of things.
Although I wrote them down. Is that okay?
Yes, it's okay. As long as they are true to your gut and really great, kind of quick points, that's awesome.
Yes.
So, best networking advice you've ever received?
Yes, pay it forward and have a few good conversations rather than speaking to everyone, as I mentioned.
Yep. Going deeper rather than wider, right?
Yes.
Yes, absolutely. Worst networking habit to drop?
I would say when you're only reaching out to people when you need something, and I don't have to be everywhere all the time. So those two things.
So what do you mean by everywhere all the time? Tell us a little bit more about that.
Kind of having a scarcity mentality instead of abundance. Like, I don't have to. I'm trying to work smarter, not harder, and not having to be. I can be impactful at a few things and not be everywhere. I don't know.
That makes sense.
Maybe that's just the way I do it.
Not having the FOMO of I didn't go to that. Right. But rather I'm going to be intentional about my time.
Yes, and just priorities too. Like, hopefully you're well-rounded and have other priorities in life. So, just having the right balance of priorities, I guess.
For sure. What are your balance items? You mentioned hiking earlier and working out.
Yes, well, I think working out is so important for your mental health. Hiking, family, creativity. I mean, I guess women, or maybe not just women, but are very complex. There's a lot of things that I need to do to be balanced, but yeah. And I think after you've built a good foundation, you can be a little bit more balanced. Like whenever someone's working as an analyst at an investment banking firm, your life is not balanced. Your life is not your own. When you're a parent, your life is not your own. I did that, and I, had my kids, or I would be working. But now with all my kids being gone and, having a little bit more flexibility.
That's nice. That's the light at the end of my tunnel right now. Very nice. And then what is one thing that instantly builds trust?
Doing what you say you're going to do. Excuse me. Doing what you say you're going to do, following up and being consistent, and yes, just doing what you say you're going to do. It's not that difficult.
No, it's not. You're right.
Yes.
And then one thing that instantly breaks it?
Not following through. Just telling people you're going to get back to them on something, or, that you're going to take care of a problem and don't. And many times I think being organized is really important. Having your list, and, I have so much going on. It's hard to get through all my emails every day, but going back through them and making a checklist or flagging them, it'll be sometimes a couple days before, because you have to think, what's my priority? But I always have to get back. Unfortunately, it should be within 24 hours, but it's not always the case.
No, because priorities, and there's a lot going on.
Yes.
But yeah, absolutely. Get back to them. Cool. And what do you see in relationship building and risk and insurance evolving in M&A coming up?
I know, I love data and analytics, and, you hear a lot about AI taking over jobs, and I was listening to a panel with Charlie Gifford from New Heritage, and they were talking about how even back in the day, a job as an investment banking analyst has changed over the years. And we just do different things, but there's never going to be a replacement for my job. I care about my clients so much, I'll go the extra mile, or I'll look for different alternatives. I'm not just spitting out information. I can call the underwriters and say, hey, what about this? Hey, can you help me out on this? So I think, loving data and analytics can only improve what we do, which I love that. But sometimes I would even say in insurance, it can hurt somebody if somebody knows the analytics of, how many storms have happened in Florida and the likelihood of it happening again per year, the insurance is going to go up on that. So it can be a benefit and a not a benefit, I guess. But yeah, it's definitely changing every industry, I think, when it comes, but people and relationships are never going to change. Me being able to talk to an underwriter about my client, what they do, how they, their safety strategy, etc., no analytics are going to take care of that for a while even. Maybe someday.
Right. Maybe.
Yes.
Maybe. Well, thank you, Jennifer, so much for joining us and sharing your thoughts and your insights from all your years of networking and in the industry. We're so grateful for you being here, and thank you for joining us as well. We hope that you learned some great tidbits that you can apply to your day-to-day starting today. We'll see you soon. Thanks. Bye.
Thank you.
These kinds of conversations are happening all the time. We'd love for you to join in, whether it's through our monthly webinars, our biannual conferences, or our SEMA certification, and then we have our chapter events across the nation all year round. You can find out more at amaaonline.com. Until then, see you next time.